Hi, this is Jack. This is going to be my bar-by-bar review of the S&P 500 futures contract for Monday, December 23rd, 2024. Yesterday, bit of a surprise. We had a really strong bull trend in the first part of the day, but then it converted into a trading range and bear channel, and we formed a tight trading range at the end of the day yesterday. Today, we have a very small gap down, and of course, it's going to be very likely that that gap will close on the first bar or soon after, and it did. Bar 1 is a breakout bar. It's triggering the stop entry long for the bulls above 81 from yesterday. The problem is we're inside of a tight trading range around the middle, and this is enough selling pressure to put the market always in short, at least temporarily. We have a prominent tail on 1. We're testing a prior day high and the EMA and selling off. We have yesterday's high far above up here, this small dash green line. We have yesterday's low and last week's low here, this thick dashed red line at the bottom of the screen. Because we have such a small gap and the first bar of the day is a weak bull bar with a big tail, I suspect we're getting continuation from this sell-off in this bear channel from the end of the day yesterday. But if you ask yourself, what is the market cycle on bar 1? We're clearly in the middle of a trading range. So therefore, I expect that follow through, sellers above, buyers below, and sideways. We have a big, round, important number here, 6,000. And we are trying to make that support. We've reversed up from breaking out below it here, a second and now a third time. But because we have a weak bar here, and we made a new high, an expanding triangle, and we have a strong bear breakout below 79 here, I suspect we need a second leg down from 79. And this could be the start of it. So bar 1, probably always in short, probably going lower, but middle of a tight trading range and consecutive bull bars, we may rally first. We broke out to the downside to find buyers and we reversed up. We have a weak doji bar, we're channeling lower, and we're still below the moving average. For that reason, I suspect we're going to go lower. 3, good sell signal bar, breaking out below 1 and 2 and closing below. Strong close, probably more down. Reasonable signal bar for a sell to close or a stop entry short for the bears, stop above 1. The problem is we're right near support at the bottom of the trading range. The bottom of the trading range could be any of these lows. It could be the low of yesterday around 18. We had bears taking the sell signal on 18, getting trapped on 19. So therefore, we have support down here. So bar 3 probably going lower, but I need a little bit more information before I do anything. Good entry bar and good follow-through bar for the bears on bar 4 and probably going lower. We're closing below 78, and this is a reversal and follow-through. It's also a breakout with follow-through, and therefore it's reasonable to expect a measured move down. But the problem is, again, we're at the bottom of an overall trading range. It's 2 legs down for the bears, and we're testing the bottom of this bear channel, which could be a wedge. We broke out to the downside and reversed up on 5, but we have a prominent tail here. And that tells you that the bulls that bought during 5 did not have enough conviction to close the bar on its high, and for that reason, we'll probably find sellers above that bar. But we are at support. We are in a trading range. We are channeling lower, but this is a reasonable buy signal bar for the bulls. So there probably will be buyers at the close and above this bar. I suspect this is too much selling pressure and the bulls will be overwhelmed. Bar 6, reasonable entry bar, but a big prominent tail on the top of the bar, a bit of a climactic bar. It could be 2 legs up on a smaller time frame. And I suspect we're still in a trading range. We may need to go lower, but it looks like the bulls aren't going down without a fight. These bodies are about the same size, and that's consistent buying pressure. So it's not all that bearish, or it could be more bearish, or we could just be in a trading range and need to go more sideways. Bar 7, bear breakout bar, sellers at the close of 6, and breaking out and closing below 6, and closing below the low close on 4. But prominent tail, again, testing this channel line to the tick. Therefore, we have strong support here. And we may find buyers and profit taking down here if we get a breakout. We also have trapped traders selling below 18 that were trapped on bar 19, and that's support as well. Good follow through for the bears on 8, strong close and closing at or below the low of 18 where the bears were previously trapped. The problem for the bears is we're breaking out of a bear channel, and that's a low probability bet. Probably this is going to fail within a few bars, and we're at support. So there may be more buyers at the close than sellers at the close. The problem is we have such a tight channel down that whatever reversal up we get may not be enough to reverse all of the selling pressure. And bar 8 is a new breakout bar, a very strong bar closing on its low, and this could be resetting the market cycle. That's a low probability bet, but it could be taking place here. It could also be an implied two-legged move down after a small trading range. Bad follow through for the bears on 9. Probably you have to get out of shorts above this bar. It's the third reversal up, meaning it's a wedge inside of a bigger wedge, and a failed breakout of a bear channel. We're also reversing up from support that I just drew. So it looks like buyers down here. We sold off 30 points below a big round number, 6,000. Both moving averages are above, so we're in a bearish environment. But this is good enough context and a good enough signal bar for the bulls, so there may be buyers above this bar, and I think it's reasonable to get out of shorts above that bar. Therefore, it is a reasonable buy. Bar 10, not the entry bar that you were hoping for, but still minimal. We're closing above 9, and it's a bull bar. But we do have a prominent tail, and that means that there's not a lot of conviction on the part of the bulls. But if we continue to channel higher, like on 11 or 12, we're sneakily creeping up higher, and now we have 4 consecutive bars up. So reasonable for the bulls to hold long through all of this. We don't have any real pullbacks yet. No low has gone below the low of the prior bar. We do have prominent tails here on 10 and 11, and now we're getting an inside bar on 12. We have 4 consecutive bars, and this is an inside bar. These are all bull bars. This is more of a continuation pattern than a reversal pattern. So 12, probably going higher. 13, channeling higher. And finally, 14, trying to get the breakout. But notice, oops, sorry about that. Force of habit from my TradeStation days, all those hotkeys I programmed. I'm not sure if this is a straight line. Maybe we can do it this way. The high of bar 11 is 59.89, and the close of bar 14 is 59.8875. We are 1 tick shy of closing above this swing high. And that's not good for the bulls. We have a lot of bars up, 6 bars up, and statistically, we need to pull back. Statistically, after 6 bars up, it becomes a higher probability that we get a pullback before we get more continuation. The bulls tried to get a bull breakout on 14. We tried to get above 11, but we're failing to close above that high. And that's bearish. We also have the moving average, which is resistance just above. And we have a round number, 59.90, right here as well. It's also a breakout test of the low close on 4, and maybe the bad sell signal bar 6 low. So we have resistance here, a layer of resistance. And obviously, we have an implied 2 or 3 legs up already at the moving average in an overall trading range. And the high of the range could be here. So it's reasonable to get out of longs if you start to get bad follow through. 15, bear bar closing on its lows, but inside bar. Reasonable stop entry for the bears, but the problem is the swing point is being created by a bull bar. And that's not very bearish. Just like here, the sell-off that started on 6 was created, a swing point created by a bull bar, which is a bad sell signal bar, and it reversed up. But 15, good bar for the bears, probably going a little bit lower, at least down to maybe the 12 low, or the 10 low, or the 9 high, and I suspect we'll find hesitation and possibly buyers here maybe for a second leg up. 16 channeling lower, minimal follow through for the bulls, for the bears. The problem is 16 is a breakout bar, and that's not a very good breakout bar. Neither is 17. Bad follow through for the bears, minimal follow through, but probably need to pull back before we go lower. And then we get 18. I thought 18 was a reasonable stop entry long for the bulls because the bears are likely disappointed with the follow through after 15, 16 to 17 being doji bars and weak and prominent tails. So I thought that this was a reasonable stop entry bar for the bulls, but we may easily go lower before we try to get a second leg up from the rally starting on 9. Or this could be a failed second leg up from the rally starting on 9. And this could be the beginning of a second leg down from the sell-off starting on 14 and 15. So probably going lower. And instead, we get a very strong bull bar. This time, we're closing above the high close on 14, and I should just leave my little data box up. The high of 11 that we failed above before, 59.89, now we are closing above by one tick. And that's good for the bulls. So this, theoretically, is a new breakout bar, and it could be resetting the market cycle because it's breaking out of this prior structure, closing above it where we failed before. We're closing above the moving average, and we have a surprise. 18 is a very bad buy signal bar. Therefore, it's reasonable to expect a second leg down from this sell-off starting on 14.15, but instead we get a strong bull bar. This to me is a buy the close bar with a stop down below for a second leg up of this rally or a new market cycle altogether. Bad follow through on 20, doji bar, not what you want to see, but minimal. It tested the EMA and it tested the high of 18. Bears probably sold at or above the high of 18 and may be disappointed with 19 and looking to get out on whatever sell-off we get. Therefore, 20 and 21 are two small doji bars that tested that support level and rallied and held. We're holding support above 18 high and the moving average. We're just below around number 59.90. I suspect we're going to get back up to the open of the day and 6,000, a big round number. These levels could be a magnet. We also have trapped bulls above here, and this is going to be resistance as well. And we have this swing high. Maybe if you're a very unlucky bull, you bought up here. So we have magnets above. It's reasonable to expect continuation here unless we start to collect bear bars closing near their lows. Good follow through for the bulls, 22, probably going higher but pulling back on 23. This is telling you that we're now in a channel phase on a smaller time frame. Spike, pullback, channel. 24, testing the high of the channel. We may need to pull back on the next bar. We do, and this is the first breakout below the low of the prior bar in this rally. I suspect more buyers below. We have 2 legs up, and now this is 3 legs up on 26. We have a spike, wedge channel, and a sell signal bar, but doji and bull bar, so not ideal and probably buyers somewhere down here. Instead of getting a bear breakout, we're getting a bull breakout. Again, probably resetting the market cycle. We had a spike and channel pattern, and this should have evolved into a trading range, testing down to the 21 low. But instead, we're getting a new big breakout bar, 27, and this bar is not climactic looking. It looks similar to 19 and is closing on its high. And that tells you that we're probably going up for some sort of measured move, at least of 27. But the problem is it's 1, 2, and now 3 legs up, and we're breaking out of a bull channel. Maybe something like this. So this is a low probability event, and this may fail within a couple of bars, unless we get good follow through. We get minimal follow through, not bad follow through, but minimal. We have a bull bar, it's a doji, and we're closing above the high of 27. Prominent tails tells you that the bulls are not all that thrilled to be buying high in the range. We're getting back above the high of the day, or excuse me, yes, we made a new high of the day. We broke out and closed above 6,000. We're above the high close of the day, which would be the 1 high or the 2 high, or the 2 close, the 1 close or 2 close. And it looks like we're beginning the channel phase on a smaller time frame. So 27, 28, spike and channel pattern, probably going higher, probably buyers below. We have trapped bears selling at the 24, 26 high, trapped, and whatever sell-off we get, we'll probably find support and find buyers at these highs or the big round number 6,000, probably going higher. Good follow through for the bulls, probably going higher still. And 30, getting above the higher time frame moving average now. We're now 14.5 points above 6,000. We have 4 consecutive bars up. We probably need to pull back soon. We have a spike in channel pattern on a smaller time frame, and the channel looks like it could be getting parabolic. If you connect the high of the first bar and the second bar, and then the high of the second bar and third bar, you can see a parabolic curve. And that's not sustainable. Therefore, we probably need to pull back. But instead, we get even more climactic and we accelerate more on bar 31. 31 is a profit-taking bar for the bulls who bought during 27, looking for a measured move up. If you bought the close of the bar or bought above the high of the bar, you got 1 times your risk of 27. And that's the minimal goal for the bulls. So it's reasonable to take profits up here and expect a pullback in a small trading range. Bear breakout, reasonable sell signal, but bad close. Probably buyers down here. Probably buyers below 30, 29, and 28. Maybe going lower. We may need a small two-legged correction before we move higher. But I think the market is clearly always in long and clearly going higher. We just need to pull back and reset a little bit first. We also have an open body gap between the body of 3 and this bar. And we have an actual gap between the low of this bar and the high of the day. But this is a very small, weak gap, and because of this downward momentum, I suspect that gap is going to close. 33, we found sellers above 32 for a second leg down, but 33 failed to get below 32, and that's not all that bearish. So we're probably forming some sort of tight trading range here, but again, a reasonable continuation pattern for another bar down, which is probably why we got 34. 34 is testing the start of the channel on 28 and finding buyers. And it also looks like 28 could be testing the prior high close on 2 or 1 and finding buyers there. So 1 pullback 2, climactic second leg, this could be the start of a trading range. Well, you could argue the trading range started on 28, and now we're testing back to the bottom of that range. So here is the trading range so far. Bull bar, breakout bar, but bad entry bar for the bulls. We may need to pull back more before we rally, but reasonable for bears to get out of shorts above that bar. 36, acceleration bar, tested the higher time frame moving average and sold off into the close of the bar. Probably still always in long, but probably still in a trading range. Therefore, we may find sellers at the close or above this bar. We have a deep pullback, finding buyers below 36 and a rally. It's an outside bar in an overall trading range. You could argue we're pulling back and forming a broader bull channel, and that's reasonable. So therefore, this is a reasonable buy the close bar or buy above the high of the bar with a stop down below. But let's see the follow through. Deep pullback, and the stop order never triggered for the bulls, but again, finding buyers below 37 and 36. Now we have consecutive outside bars. We have a good bull bar, and then a strong bull doji bar on 38. I suspect we're going to go higher, reasonable signal bar for the bulls, but we are risking a double top here. You could argue the double top with the high close on 30 failed here with the strong reversal on 38. Therefore, it's a reasonable stop entry long for the bulls. But overall trading range, middle of the range, high of the range is here. Is a 60% chance that we're going to go up here before we get down here? I'm not that sure, so maybe it's better to buy a pullback. But if we start to get some urgency, reasonable. Pullback and then a rally, 39, but again, barely closing beyond the prior bar and not really breaking out of 37. So if it's all that bullish, how come we're getting bad follow through and not really going anywhere? We may find disappointment above these bars or above the high of 31 unless we start to get some strong bull bars. Here's one on bar 40. To me, this is a buy the close bar, stop down below 38 for a measured move up. You could argue consecutive buy climaxes, some sort of wedge channel. But I think we're always in long, and I think we have higher to go. Bad follow through, bear inside bar, Testing the low of the prior bar, we could still be in a tight trading range. It looks like we're trying to form a lower high, and the bears want a bear breakout, testing down to the bottom of the range, but we have trapped bears selling below 36 who probably used the sell-off on 39 to buy back their shorts, or the sell-off on 38 to buy back their shorts. So I think we have trapped bears here who are looking to sell highs. Therefore, if you're a bull and we're in a bull channel, you should look to buy low, buy pullbacks. 42, we tested the high close on 40, reversed down and formed a bear bar. It's an inside bar. Sorry, it's not an inside bar. It's an OIO pattern at the high of the day in an overall trading range, 1, 2 legs up, and now we have consecutive bear bars closing near their lows. Reasonable stop entry short for the bears, but I think we're always in long and we still have trapped bears down here. Therefore, we have a layer of support, the moving average, this moving average, and trapped bears. So reasonable signal bar for the short, but probably always in long, probably better to wait and look to buy a pullback. Buyers below 42 for another leg up for the bulls. Outside bar, not an ideal buy the close or buy above bar. We could still be in a trading range. We're channeling higher and we're starting to get a lot more bad follow through. We're collecting bear bars here and here, and we have prominent tails on these bars. And that tells you that the bulls are losing the conviction that they had through this rally. And even then, this rally here, significantly bad follow through. Prominent tails, mostly going sideways through here. Big climactic bar here, bad follow through. Lots of overlap here. Tight channel, but lots of overlap. Stronger bars here, but late in this trend, restarting the market cycle, 1 pullback, 2 legs up. Overall, it's a trading range day so far. So probably sellers above this high or not far above. 43 probably going higher, but I expect bad follow through. Minimal follow through for the bulls. Bull bar closing above this bar. I'm not sure it's closing above this swing high. Maybe barely, but probably needs to pull back. Inside bar 45 and then bear breakout, but bad close 46. This is a sign that the bulls are losing conviction and may be losing control of the market. We have 1, 2, 3 legs up in an overall trading range, so I expect some sort of sell-off to test these lows and relieve the trapped bears. Channeling lower, inside bar 47, probably going lower. Bit of a surprise, 48, but not closing above the highs. Good follow through, but small bar. We're losing momentum and starting to collect selling pressure, and that's going to drive the market lower unless we start to see more urgency and strength by the bulls. Finally, a strong bar, but late in the trend. It could be 3 or 4 legs up late in this rally, and this is the strongest bar. This could be a climactic bar. Therefore, we may find sellers above or at the close, which is why we have 51. I suspect we're going to go lower and trigger the sell, but it's not ideal because of the tail. Again, minimal follow through, but failing to close below, and not ideal because of the tail. I suspect sellers above and going lower. Bull bar and doji channeling higher 54, and again 55. It looks like the channel is starting to broaden out. We have the high close. It looks like we tested on 54, 55. Therefore, we may find profit taking at new highs. New high on 57. That's 56. 57, more follow through, but really small bars, really tough to hold long up here. We could reverse the market at any time. We also have a very clear wedge shape happening here. Now this is like, a wedge that you would see on the internet if you Googled wedge price action. So we're wedging higher and we're losing momentum, but we have a lot of consecutive bars up. And this is coming late in this trend. I suspect we're going to find profit taking and selling up here. But so far, no reason to sell. Failed bull breakout to a new high, and then bear inside bar tells me we may be getting the bear breakout soon. Bear breakout 60, but big tail. Probably needs a second leg down. We failed to get above 60 and sold off. Bear inside bar, probably going lower, and it looks like a give up bar on 62. Good bar for the bears. We're closing below many bars to the left, but not that many. Looks like we tested and broke below the bad stop entry buy signal bar on 47. and we're heading lower. We have another bad stop entry buy signal bar on 42 and 41 here. We have trapped bears that sold below 45 here. Trap bears that sold below 42 here. And trap bears again that sold below 36. And we have the start of the channel here on 34. So these are all going to be test targets. Basically, all these higher lows are going to be test targets. This is a reasonable sell to close bar, expecting a measured move down of the bar. And that's reasonable if we are forming a trading range. We have 4 consecutive bars down, but this is really the first big breakout bar, so we need follow through for the bears. And it's a bull bar. I don't even think we broke out below its low. So this is not ideal for the bears, but I suspect maybe another bar up, but sellers here for another leg down. Instead, sellers above the bar, bear bar, turning down, closing on its low. I suspect we're going lower. But bad follow through, looks like we may be just channeling lower. Probably sellers at the close and above this bar. 66 inside bar, probably going lower, but I expect bad follow through. And there it is, 67. Probably sellers at the close or sellers above, but we do have a small wedge. And this may be enough for a small relief rally. So small wedge, we may get a little correction here, but I think we have enough selling pressure and enough context now that tells you we're in some sort of trading range. And we have a pretty tight channel down. A micro channel since here, that's 4 consecutive bars down. And maybe a micro channel since here, and that's 5 consecutive bars down. So we probably need at least 1 more bar down, which is what we got here. Now this looks like a wedge overshoot if I've ever seen it, but that's taking place on a smaller time frame. And on this time frame, this is just a tight channel down. So I expect a pullback and a second leg down, prominent tail at the moving average. They're probably going to be buyers here. So we got a bull bar. Strong buy signal bar. I'm not sure if this is ideal context or not. What are we testing? We didn't quite get to the bad buy signal bar on 34. We didn't get to relieve the trap bears that sold below 36. The low close looks like a close here where the bears were trapped initially selling below 42, and that's a reasonable sell for a double top or some sort of trading range. It's just too much buying pressure up. You know, it's 6 or 7 consecutive bars up. So that's reasonable. This is okay, but we're still inside of a micro channel, so we may find sellers at the close or above this bar for that reason. Clearly always in long here, not so clearly always in long here. We're below the moving average. I think we may be always in short. If you're a bear, reasonable to get out of shorts above this bar, therefore it is a reasonable buy. I just don't think that it's 60% chance we're getting here before we get here, because this channel down is too tight. It's getting a lot of bad follow through, but we have a lot of strong bear bars, and I think the bear bars are a lot stronger than these bull bars if you just look at them. This is the strongest bull bar by far, but it made a new low. So let's see the follow through. No follow through. Instead, we have trapped bulls, therefore probably going lower, probably sellers above this bar and at this high. But weak tail, we may need to pull back, probably going lower. Pull back, strong inside bar, second entry long, reasonable signal bar, but not ideal, tight trading range and a tight channel down. Good entry bar, good follow through for the bulls. Let's see if they got to 1R. Not quite yet. So reasonable setup for the bulls. I just think tight trading range. I think tight channel. First reversal up, likely to fail. Instead, we're getting good follow through. 3 strong bars up, coming from a pivot low created by a bull bar. It's second entry long, and this is reasonable. Maybe going higher. We have a breakout and follow through above the EMA, closing above this swing high. Maybe always in long, but we have the start of the channel here, 64 high, and we're not quite there yet. Looks like we broke strongly above and sold off into the close. Now we have 4 strong bars up, but the bodies are getting smaller, so the bulls are losing conviction here. We need more good follow through, and we need to find buyers down here. Buyers at the close of 74, channeling higher. Wow, I didn't even realize how late in the day it was. That explains this rally. This could be a buy the close rally into the end of the day. It's Christmas Eve. Today is December 23rd, so we may be going higher. We broke to a new high of the day, and we're closing above the previous high close. So I suspect profit taking above this bar, and I suspect we'll go a little bit higher. Channeling higher and higher still on 77. At this point, too late to really do anything. Outside bar, bear breakout, 79. 80, bull bar, tight trading range, testing support here at the breakout point and finding buyers. One pullback, two legs down. Reasonable signal bar for the bulls on 81. Minimal follow through. So interesting day overall for sure. I think pretty tough to stay long through this. It just looks like it wants to reverse at any point. But pretty clear down here, you know, clearly always in long here to me. I don't know if it's clear to other people. I'm not sure if it's actually clear at all. But to me, I just think it's too much buying pressure. And whatever, you know, sell-off we get, we need to have a strong sell-off in order to flip the market back to short. And this certainly is not enough. First of all, 15, I don't want to say that you can ignore 15 because you can't. But 15 is an inside bar, and that's not a breakout bar. This is just a pullback, really. It's a higher time frame pullback. So 16 is the breakout bar, and 16 is not that strong. Neither is 17. So when 18 happens, and then you get a bull surprise 19, you have bears initiating new shorts for leg 2 down, and now they're trapped into a losing trade. And maybe new bears sold the high or the high close of 15 and 14, and they're trapped here. So I mean, this is pretty readable, pretty tradable, and pretty clear to me. I traded until about noon today, and this bar shook me out. I bought the close of 27, and I thought we might start to reverse on 28, so I got shaken out right there like an amateur. But fun day, strong bull trend day, wedge bottom on the open, then a higher low, major trend reversal, strong bull channel up, which led to a buy climax, and then spike and wedge bear channel down, and a buy the close rally to the end of the day in a tight trading range. So pretty cool. Pretty cool. That's my read. That's my practice. Thanks for watching.